This is a 15-minute fair value gap execution. Same framework, any market. And it works because of one confirmation rule. Most traders think that fair value gaps don't work. They do, but they are trading them wrong. Instead of waiting for confirmation, they are entering on impulse. Inside the 15-minute structure, there is one confirmation rule. A rule that filters out low probability entries. If you ignore that rule, this framework will not work. Let me show you exactly what that looks like. I am on the 15-minute time frame, and as I told you, this strategy is going to be working in all markets. So if I proceed with price action on the 15-minute time frame, we see that after this downtrend right here, we are having a very impulsive reversal. Now, the problem with most of you is that you don't know, let's say you have an impulse on the opposite direction, you don't know which fair value gaps you are gonna be using. Many times your fair value gaps are gonna be penetrated, many times they are not gonna be tested. Now, if I proceed with price action, you are gonna see exactly the things that you are struggling with, and then I will tell you exactly how to solve this problem, what the solution to this issue is. Now, look at this example. This is a very, very nice example right here. Okay, let's proceed from here exactly. You are having this downtrend, and then you're having a high, a higher low, and then you're having a higher high and a higher low right here, followed by another impulse. So let's begin from here. As you see the chart, and now that we have even more confirmation, instead of trying as an example to enter on this move right here, now that we have even more confirmation, let's try to see what we are going to be doing over here and where you are struggling exactly. Now, if I played one more candlestick, we are creating one more candlestick right here. You guys have two issues. One of your issues is that you go ahead and you identify all the fair value gaps. You say, as an example, I have this fair value gap right here, and you also say that right below it, I have yet another fair value gap. It is this fair value gap exactly right here, this tiny one. Now, the first issue that you are having is that you don't know which fair value gap is going to be tested. And even though this is something that you are never gonna know exactly which one, I'm gonna give you high probabilities with this thing that I'm gonna talk about right now. And the second thing that you are struggling with is that you don't know where to place your stop loss. As an example, you believe that every time that you are entering a fair value gap, that you have to place the stop loss all the way down there, or that the stop loss needs to be extremely safe, let's say, and you will understand soon that safe is not the way to go in trading. What feels safe is the wrong thing to do. So what are we gonna be doing right here? Okay, first of all, let me play price action to show you exactly how you are struggling. Okay, another fair value gap. I think you know what a fair value gap is. If you don't know, it is the gap that is created between three candlesticks. And if I do that and increase this area, you see the low of this candlestick right here and the high of this candlestick right here have left a gap. They are not covering this candlestick that my cursor is right here. Okay, so we have one candlestick, 2 and 3 for this fair value gap, and this area is not covered. Now, where the heck are you placing your pending order, or where are you looking for your confirmations? I'm going to show you how to do it with a pending order. By the way, you don't need to look for any confirmations. So am I placing my trade right here with a stop loss where? All the way down there. Am I placing it in the second fair value gap exactly right here? Or am I placing it in the third, on the third fair value gap over there? Okay, with the stop loss right here or even below the lows. What am I doing here, guys? What are you gonna be doing? This is the reason why you're not optimizing your trading and you keep losing. As an example, if you would be taking the trade from this area right here, most of you, I assume you would be having a smaller stop loss. Okay, you would see your first reaction from the FVG. In this occasion, we don't have a reaction, but let's say that you took the trade like that and you lost. And then Let's assume that you saw a confirmation right here and you took the trade from this fair value gap, placed the stop loss below, and what happened? And you lost. Very nice. What are you gonna be doing instead? Let's go back. What you're gonna be doing, you are gonna be identifying your fair value gaps first of all. Let's go a little bit back in time. And now, I don't want you to do anything. I will play price action, I will continue, and I will tell you what you are waiting for. Nothing yet. Nothing yet. And here we have it. Okay, we are safe to delete the first fair value gap. Now, what am I waiting for? And this reaction can, or it can either not be from a fair value gap. I don't care. I don't care for that thing to be created. What is that thing that I'm looking for? For a proper low to be created, guys. This right here is a low that is lower than the low of the candlestick to its right, and it is lower than the low of the candlestick to its left, as you can see up there. Okay, meaning that this becomes a valid low on the 15-minute time frame. Since this is a valid low on the 15-minute time frame, you are gonna be asking yourself, this is now a point where liquidity is below, and this is the trick of today's video. You will be waiting for liquidity to be created. Now that the liquidity has been created with a form in the form of a proper low, as I showed you exactly right here, what you will be doing, you will be identifying whatever is left from the fair value gaps below this creation of this low. So below this low now. If I take this line and I extend it to the left, you will see that from this whole fair value gap right here that we had, it has been tested until here, and it has left an area that is untested, which is from this week until this high. Very good. So we have one fair value gap here, and we also do have a second fair value gap, which is this fair value gap exactly right here. Okay, this second fair value gap exactly right here. Very nice. What am I gonna be doing? What you are gonna be doing in this situation, you are gonna be placing two pending orders from both fair value gaps. Since liquidity has been created and you were patient enough to wait for the liquidity to be created, you will take a buy limit order from this first area right here with a stop loss right below this candlestick, okay? The candlestick number 2 out of the 3 that created the FVG. So this candlestick and this candlestick right here and this candlestick right here, right here, those 3 had created this huge fair value gap, which, as we said, left this part only now, since we created a low from this week to this high. So what you're gonna be doing, taking the trade with a buy limit order and a stop loss below the low of candlestick number 2 out of the 3 that created the fair value gap, a little bit below. And you will be targeting at least a 3-to-1 reward to risk. I would go for a 4-to-1 reward to risk with this beautiful strategy. Now, this doesn't mean that this is gonna hold, but there is a second fair value gap down there. I'm looking at it right now. If I go ahead and I do that, if I extend this area, there is a second fair value gap that is created from these 3 candlesticks, 1, 2, and 3 candlesticks. So 1, 2, 3. This gap is untested. This is your fair value gap. Very nice. You will be placing another pending order, as I told you. Now, exactly at the top of this fair value gap, of this bottom one, and the stop loss below candlestick number 2 out of the 3, 1, 2, 3 that created this fair value gap, and you will be going for at least a 4-to-1 reward to risk. Okay, very good. Let's see which one is gonna get activated right here and how this is gonna play out. And we are not finished. I'm gonna prove to you that this concept works, and it works like a charm. This one is being activated, as you can see. Very safe stop loss, 4-1 has been hit. This is fantastic. 4-1 has been hit and we weren't stopped out. Now that this second one wasn't activated, the first didn't lose, it is safe to just delete it. I said stop losses a little bit below the lows of the candlesticks number 2, namely. Okay, so don't do it exactly right here, leave a little bit of space. It goes right here, okay? Leave just a little bit. And by the way, this strategy works on all markets, as I told you. You can practice this strategy on crypto, you can do it on indices, you can do it on Forex. This works like a charm. Okay, this 15-minute fair value gap trading strategy with confirmation works in all markets, guys. All markets. Now, if I go ahead and play and continue with price action, and show you another example, you will say, oh my God, Chris, look what we have been missing this whole time. Again, we took our 4-1 here, and as you can see, this trade went for 12-1 already, but let's leave that aside as it is. And on the very same move, I'm gonna prove to you that this thing works like a charm, okay? And now I will prove it to you in many different ways. First of all, let's go a little bit back in time as we did previously. Here on this impulse leg right here, you have again a ton of fair value gaps. One fair value gap is this fair value gap right here, and I can zoom in even further. This one right here, you see this gap? A second fair value gap, as I see it, is this fair value gap right here, okay? A third fair value gap is this fair value gap right here. And now the question, again, is for many of you, what the heck am I doing, Chris? How am I gonna be entering those fair value gaps? And a mistake that you are doing is that you are taking trades after you see any single reaction, even in a smaller time frame, and you just place enormous stop losses like that, or you place tight stop losses like that. Whatever you do, you will not be winning if you do it blindly. So in this occasion, you would be thrown out of the first one, and for the second one, what are you doing right here? Are you entering after this impulse? So where you gonna be entering instantly when you see this thing right here with the stop loss below this area? I know that you are doing it, and now you're happy, and then, of course, in this occasion, it is a very funny example because here you would have won, but 99% of the chances of the times, you're not gonna be winning here because this is gonna be stopping you out. So if I take you back in time, right here, we will be doing the same thing. You delete all of your fair value gaps. You don't care about the fair value gaps here. You go back and you wait for the creation of a proper low. And for the opposite thing, for selling, for shorting, you would be trying to identify a proper high, okay? So if you would be having a move towards the downside, you would be looking for a proper high to be created for the liquidity to be grabbed to continue towards the downside. Here, I will show you again because you guys don't even know what a proper low is, but if I play those candlesticks as they are, we will see that this has almost already been created, but I don't want to confuse you. Let's proceed a little bit. A proper low has been created. Very nice. Very good. Which is now, of course, this is your proper low, but I don't want to confuse you. Look at this low right here. It is lower than the low of the candlestick to its left, lower than the low of the candlestick to its right. So it is a proper low, meaning that there is liquidity below this area exactly right here. Okay, and since there is liquidity below this area, you do that your liquidity zone and you leave it like that as I have it, and you say, below my liquidity zone, do I have any fair value gaps or remaining parts of fair value gaps? And yes, you do. Which ones, guys? First of all, we had this enormous fair value gap, which was tested until this low, so we reduce it to that, okay? And below that, we have yet another fair value gap, which is that. And because I want you to get a proper entry, and when I say a proper entry, I mean an entry without your silly confirmations. I don't want you to wait for silly confirmations because you will be sacrificing a lot of RR, and we don't want to do that. We want to enter as low as possible. Your liquidity has been created. Where am I going to be taking my trade? I am going to be taking my trade exactly right here, pending order right below this low, of course, right below the liquidity, with the stop loss below the low of candlestick number 2 for this fair value gap. And I'm going to target at least a 4-to-1 reward to risk. And here is my 4-to-1 reward to risk over here. And I'm going to be placing another pending order. Let me zoom in a little bit. Another pending order right here at the top of this second fair value gap. Okay, this is my second pending order exactly right here. And the stop loss, look down there below the low of candlestick number 2 out of the 3 that created this FVG. And I'm going to target a 4-to-1 reward to risk. So let's see what this liquidity is going to be doing. Let's zoom out just a little bit and let's proceed and see which one is going to be tested of those. Okay, we proceed and I think, excuse me, we're in the trade. Delete the second one because the first one has been activated. Very nice. You will be targeting with this strategy at least a 4-to-1 reward to risk. Do you get it? Okay, at least a 4-to-1 reward to risk. Let's proceed and let's see if our 4-to-1 reward to risk is being hit, is being met. Okay, if you're going to be winning with this strategy, you will need to always target at least a 4-to-1 reward to risk in order to optimize your returns. No stop losses at break even. You do not move anything at break even. Okay, 4-to-1 reward to risk and you are safe. Now let me show you a beautiful bearish example, because what are we doing if we don't show a bearish example? We also have beginners watching the channel. You guys need to know. And you also guys need to know that we are rocking it in the trading community, and especially those students of mine who are doing the mentoring. They all have guaranteed profitability. If you are interested in those, go ahead and click on the links down in the description. Everything is there. Everything can be found there. Let's proceed with the bearish example. We see an impulse towards the downside, and of course we have a ton of fair value gaps. Well, not a ton. Let's not be silly. There are 2 fair value gaps. Let's zoom in a little bit more so that beginners can also follow. By the way, your feedback, guys, I'm following your feedback and I'm trying to improve right here. Okay, make it also beginner friendly. One fair value gap is that. And we do have another fair value gap where, guys, right there, right up there where I'm looking right now. Okay, this is another fair value gap up there. What are we going to be doing? Are we going to be entering blindly? No, we're not going to be entering blindly. We will now wait for a proper high to be created. What is a proper high, Chris? Let's go a little bit further here. What is a proper high? Let's see, guys, what a proper high is. This is a proper high. And by the way, you had a third FVG, but you don't care about the third FVG. You don't actually care about any of the FVGs until you see the proper high being created, as I told you. Think of it like that. You have an impulse with lots of FVGs. You can see them. Do not identify any of them. Wait for a proper high to be created in this bearish situation. And you do have a high here. Why is that a high as I see it? Because it is higher than the high of the candlestick to its right and higher than the high of the candlestick to its left. So it is a proper high. Now, traders who cannot wait, they will enter from this FVG, they will see the reaction and they will enter the short, you will not. You have identified the high, which is what? It is, we said, liquidity, guys. This is your liquidity right here. And since this is your liquidity, you can extend this line to the left right here, and you can say, do I have any fair value gaps above this area? Yes, I do. And which are my fair value gaps? I see those two fair value gaps. As I said, this one right here, and I also have this one right here. Very good. Where am I placing my trades? Do you remember? Now, one sell limit order is going exactly at the bottom of this FVG with the stop loss above candlestick number 2. Number 2 out of the 3 that created this fair value gap. So this is your first one, and you are targeting at least a 4-to-1 reward to risk. And for the other one, you are placing another pending order right here with the stop loss above candlestick number 2 out of the 3. It is above me somewhere there. Okay, that created the fair value gap, and I'm targeting at least a 4-to-1 reward to risk once again. Okay, very nice. So I have my 2 trades right here. And don't go ahead, of course you can ask me questions, but don't try to perfect your trading by asking me questions in the comment section. If you want to perfect your trading, come in the academy and also come in the mentoring. If you want this to be the last money that you spend, go ahead and spend it. If you want to keep losing money, go ahead and lose money. As an example, I can take you here on this pro account. I have a ton of pro accounts, by the way, guys, a ton of them, more than 10 pro accounts, but I'm activating them one by one and I'm trading them one by one, and I will show you that this is today only. Where is it? Today. Or if I do this week, maybe it's gonna show it. Okay, there you go. 100% only today I traded it, and there we go, winning trades 100%. Okay. And I won $1,029. And this is, of course, withdrawable money, if you know how those prop firms work. Code ChrisFX, by the way, for the highest discounts. ChrisFX is your code for the highest discounts on any futures prop firm. This is what I'm doing on a daily basis right here. Okay, if you want to achieve results such as this one, go ahead and withdraw from day one. Go ahead and join either the academy or even better, the one-on-one mentoring. Okay, so let's see how this would be playing out. I will go ahead and proceed. And we see that the second one is almost activated. Now it is activated. And, okay, we proceed, and we hit our 4-to-1 reward to risk. In these occasions, I want you to delete the second one. You leave the second one only for scenarios where price penetrates the first one instantly and goes ahead and enters the second one's territory instantly and goes ahead and gives you a win on the second one. These are the only scenarios where I want you to keep the second one open. When the first one plays out, you delete the second one, and you forget about it. Okay, and of course those trades, all of those trades that I showed you, run for way more, guys. You might have noticed that all of those trades that I showed you right here are running for way more. Nonetheless, I didn't sugarcoat the whole thing, and I didn't tell you go for a 10-to-1 reward to risk. I told you go for a fixed 4-to-1 reward to risk, or at least 4-to-1 and trail aggressively afterwards. Okay, does this make sense? Hopefully this video made a lot of sense. This is a fantastic video that you need to go ahead and follow step by step, back test it, and I guarantee that to you, if you follow this channel, if you subscribe, if you keep practicing my strategies, you will have profitability. Again, if you want to join us, the fantastic mentoring, which is one-time payment and you learn forever, or the academy, you will learn the best strategy of your life, plus a ton of psychological tips to keep you from making bad decisions. Thank you all for watching. Bye-bye.